Hello everyone, welcome to the Ichimoku daily analysis for Euro US dollar FX for Wednesday, November the 16th, 2011. Well, a continuation of the trend to the downside today, a series of candles making lower highs and lower lows, and continuation of that today with a red body candle. The red body candle is roughly the same size as the previous day, so the sellers have made roughly the same amount of net bearish progress on the day between the open and the close, and that's fairly significant. The market today also took out this minor support level down around 135 and took it out in a fairly bearish way, although we did see the sellers lose some commitment as evidenced by that shadow on the bottom of this candle. So we have had this bearish breakout down below the Ichimoku cloud for the previous day's trading and a few trading periods ago, and we've seen the market rally after that first breakout, find resistance up around the 138 level, and then sell off and break out once again with a bearish candle. So there is good strong potential for this market to continue to the downside. However, there is strong support down around this 134 level. We can see the shadows on these candles previously, and that does show the sellers losing commitment around that area. So there is a possibility that we could see the sellers lose commitment around the 134 region again. If we see continued bearishness down through that level, then there is strong potential for the market to trade down to around 134.40, down to this major swing low. Just looking at these candles here, there are shadows on the bottom of these candles, so there was support coming in down around the 132.30 level and down around the 133.50 level, so we do need to watch those levels as well on the way down. So in Ichimoku charts terms, the market is bearish in all three time frames. We have the market trading below the cloud, and we have at that breakout down below, which is a bearish signal in Ichimoku charts, and we're also trading down below the Kijun-sen and Tenkan-sen, so bearish in the medium term and fast term time frames, and both of those indicators are pointing down, showing this downside momentum that this market's got in both of those time frames. Looking at the checkout span, that's below the corresponding price action, so this market this is confirmation of the bearishness that we're seeing overall in this market. Next to the Aussie dollar, US dollar FX, and here we see a continuation of that trend to the downside, candle making a lower high and a lower low. An increase in the size of the body of this candle, so that's a sign of gain in the downside momentum, that the sellers are gaining some momentum there. Compared to the previous candle, where we had a very small red body candle, a larger shadow on the bottom, did suggest that there was potential for a change of trend, but the market didn't trade anywhere near the previous high, and we've seen this fairly large red body develop, where we've had the sellers close with control, and they've shown some good strong commitment to taking this market lower. We do have fairly strong support at this swing low at 10.05. And the market has tested within that region. We can see this small shadow on the bottom where the sellers have lost some commitment. So that's a very big level for this market tomorrow. It's roughly about 10.05, 10.048. Down below there, we do have a previous resistance level just down below the round number $1, and at roughly 99.80. And that will offer itself as potentially strong support for this market. The round number $1 obviously will be very strong support, but it wouldn't surprise to see the market test just down below there. But we also have the market trading within the cloud, so this support that we could see in future extends all the way down to around 99 to the bottom of the cloud. Now, in big picture terms, this market is neutral by trading down within the cloud, and we've seen the market trading up above the cloud and within the cloud and up above, and we've seen a few breakouts to the upside above, but the market is always being attracted back towards the equilibrium that's defined by the cloud in the longer term time frame. The market is, however, trading down below the Kijun-sen and the Tenkan-sen, so we do have a bearish market in the medium term and fast term time frame. Looking at the checkout span here, that is trading just below where this candle closed, and that is suggesting that we have potential continued bearishness in the market. It's also trading down below the cloud, but certainly by trading within the cloud big picture terms, the Chico span is not supporting that neutrality that we're seeing by trading within the cloud, by the current price action trading within the cloud. Just looking at the Kijun Sen here, that's pointing flat, and there is a possibility that the price action could be attracted back towards there, so we do need to be aware of that. If we do see price action attracted back towards there, we do have strong resistance offered by the top of the cloud, roughly about 102, and then certainly a strong resistance at the Kijun Sen and Tenkan Sen on the way up at 102.44 and 103.075. Above there, if we do see the market rally, we have strong resistance up around the 104 level as well. But this market's looking quite bearish in the short-term time frame at the moment. We have this level around 1005 that's quite important. If we do see the market test down below there in a bearish way, we certainly could see the market trade to $1 and then extend slightly down below there, down to perhaps around 99.80. So the low of the current candle is important, and certainly that swing low that's close by.